Superman, I move that they be granted to present the 2026 midterm budget and economic review. This is in line with the prescribed budget process calendar as outlined in the Public Finance Management General Regulations of 2019, published in Statutory Instrument 135 of 2019, as read in the Public Finance Management General Amendment Regulations published in 2021 and the Statutory Instrument 127A of 2021. These regulations require the Minister responsible for finance, economic development, and investment promotion to provide the midterm fiscal review no later than the 31st of July. I thank you.
Please proceed, Honorable Minister. May the Honorable Minister be held in silence, please.
Thank you. Madam Speaker, if I may start from the beginning. Today I present to you, and this of us now, the 2026 midterm budget and economic review. The review provides an update of fiscal and economic developments during the first half of the year, as well as progress on the implementation of the 2026 national budget. This is anchored on the theme, enhancing drivers of economic growth and transformation towards Vision 2030. Madam Speaker, notwithstanding the volatile global economic environment compounded by conflict in the Middle East and in Europe, and the periodic outbreaks of disease such as Ebola virus, for example, negatively affecting tourism and hospitality industries, the domestic economy continued to show remarkable resilience during the first half of the year. This resilience was underpinned by strong fiscal revenue performance and macroeconomic stability, particularly currency, the exchange rate, and price stability. Significantly, the annual headline inflation in ZiC, domestic currency, decelerated progressively from a peak of 95.8% in July 2025 to 15% by December 2025. During the first 7 months of 2026, annual inflation averaged 4.2%. This is the first time over 3 decades that the country has attained single-digit inflation in domestic currency. And this is a testament to the congruency, efficacy, and effectiveness of our macroeconomic policy management. Madam Speaker, GDP growth for 2026 is projected to moderate to 5%, following a strong performance of 8.3% GDP growth in 2025. The 2026 growth reflects buoyant mineral commodity prices, a favorable agricultural season, and the positive impact of the ease of doing business reforms through the review and the rationalization of regulatory and compliance fees and licenses and payments. Going forward, we anticipate sustained economic growth due to increased investment in both public and private sectors, notably in value addition and beneficiation in line with government strategy under NDS 2 which aim to reduce dependence on primary commodity exports. Significantly, Madam Speaker, Zimbabwe is now one of the countries in a distinctly favorable macroeconomic environment, characterized by low and stable inflation, currency and exchange rate stability. Zimbabwe is also among the countries with the highest GDP growth rates on the African continent. As in fact, last year, 2025, we ranked number 2 of the entire African continent. As a result, the country is becoming the more attractive to foreign direct investment, particularly in the mining and manufacturing sectors. This, together with engagement and re-engagement efforts, enable the country to make international diplomatic gains, leading to the election of Zimbabwe as a non-permanent member of the United Nations Security Council, UNSC, in June 2026. And we've also just been accepted as a member of the new development bank of BRICS Bank this month, July 2026. Let me turn to the issue of budget transparency and effective management of the budgeting process, Madam Speaker. The country has sustained progress on enhancing budget transparency, remaining among the top performers in sub-Saharan Africa. Among regional peers, the country ranks third in sub-Saharan Africa after South Africa and Benin. These are the only 3 countries, South Africa, Benin, and Zimbabwe, in Africa that meet the global minimum standards score benchmark of 61 out of 100. On the screen, Madam Speaker, then I've got some slides which I'll be running. Show please slide 2 and 3. Then the next slide 3. I think someone can hear me, all right. Anyway, we will see the ranking of the various countries under slide 3, which is the next slide. And Madam Speaker, we also congratulate Parliament for its role in shaping this budget. That is also taken into account when we survey is done. Let me turn, Madam Speaker, to the global economy. Turning to the global economy, the IMF, through the World Economic Outlook, in July 2026, revised downwards the World Economic Growth projection of 2026. This is from an initial estimate of 3.3% down to 3%. The revision was on account of increasing global risks. On the next slide, we will see the various growth rates for various countries. You will see on that slide that overall growth is 3% for the globe, for the world, but yes, we still have star performance. India, as a major economy, remains on top, growing closer to 7%, followed by China, growing between 4 and 5%, and then the rest of the global economies follow that. But Africa is on average performing at the level of China in terms of growth. Madam Speaker, the sub-Saharan African region is also impacted, with regional growth expected to slightly moderate from 4.5% in 2025 to 4.3% in 2026. The region remains exposed to external shocks due to overdependence on commodity exports and imports, particularly for essential goods and services such as fuel and fertilizer. I now turn to domestic economic development and outlook. Zimbabwe experienced robust economic growth in 2025, with the economy expanding by 8.3%, which was higher than the initial projection of 6.6%. This was the result of stable macroeconomic conditions, recovery in agriculture following the drought of 2024. It was a result also of improved energy supply and strong export growth, especially in areas such as gold. If the slides were showing, yes, it's not showing, I will show you the gold price, which currently hovers above $4,000 per ounce, but also strong performance from the base metal sector. All of these added to Zimbabwe's strong GDP growth rate of 8.3%. I see the gold price now is up there. If you have not been buying gold, you have made a big mistake. I told you to buy gold a year ago, you should have listened. In addition, foreign direct investment grew substantially to $969 million in 2025. This is up from $597 million that was recorded in 2024. This was the highest in several decades. Madam Speaker, the high growth rate recorded in 2025 places our country among the few top African countries that recorded these high growth rates. We can see over there that the Zimbabwe is growing at, the bottom can be seen, 8.3%, and then Angola 3.1%, Botswana -0.9%, Eswatini 3.6%. You can see Ethiopia, which was ranked number 1 at 9.2%, and others. I'll leave you with that now. Uganda 6%. In terms of sectors, agriculture recorded one of the highest growth rates at 27.9% in 2025 and is projected to grow at 6.9% in 2026. In 2026, the 2026 second round of crop livestock fisheries assessment report projects a total grain output of 2.4 million metric tons. In addition, the dairy sector is also recording high growth rates. We expect this year to receive almost 167 million liters of milk. We were at 96 million in 2021. Madam Speaker, this is a remarkable achievement over the last 6 years. We have become self-sufficient in milk production. Mining is one of the fastest growing sectors in Zimbabwe, growing at 10.4% in 2025. Mining growth is projected at 5.6% in 2026. The major driver being gold, which is expected to reach 55.6 tons in 2026, up from 50 tons achieved in 2025. The sector is expected to further increase its contribution to GDP, foreign currency generation and employment, owing to the government's thrust for mineral beneficiation and value addition. Already export earnings of lithium products grew substantially by 229.8%. This is to a figure of $782.2 million during the first half of 2026. This is up from $237.2 million in the first half of the previous year, 2025. The manufacturing sector continues on a growth path, projected at 5.2% in 2026, reflecting increasing investment and improving capacity utilization. Capacity utilization in the sector improved from about 52.2% in 2024, as you can see from that chart, the bar there for 2024, and then it improved to 61.2% in 2025, and this is for large-scale enterprises, and is projected to increase to 63.5% in 2026. So if you draw a line from 2013, you can see a steady increase on average in terms of trend in our capacity utilization in the manufacturing sector. The sector is also benefiting from the Industrial Development Fund, with 85 million ZiG having been approved for 15 companies, of which 33.1 million, which is about 40%, has already been disbursed during the first half of 2026, out of a budgeted figure, total budgeted figure of 101 million ZiG. So this is the spread of the investments of the National Development Fund by regions, 5 provinces so far, and we have 5 more provinces to go because we try to cover every province. Although opportunities may be concentrated in the bigger cities, we try hard to find opportunities outside the metropolitan provinces.